Is it time to sell in May? It's UPBOptionMillionaires.com, May 2nd, 2016. You can see we're pulling back again from this 2100 level on S&P 500 futures. Is that going to continue? It's been a point of resistance in the past. We crashed from that level in 2015 in the summer, August, came back up to it in November, and then ultimately in December into January, started to sell off from that level down to the worst start in the history of the stock market. But then what happened? We kind of just dusted ourselves off in a massive face rip rally here up to that 2100 level, starting to pull back again. If you want to look at the recent pullback from the 2100 level, it's the worst sell-off we've seen since the lows in February, which is not really saying much because we haven't had much of a pullback since, but certainly something to keep an eye on. That 2100 level has been a trigger in the past. We'll keep an eye on that level. Also, it's May. You're going to hear a lot of that sell in May talk. If you want to look also for the VIX, trend line support here all the way across at about the 13 level. That's where we bounced from. Pulling back, I think the VIX is down about 1% here pre-market, but certainly something to keep an eye on because that 30 level, we get back up to that, it's going to be a great buy point for the market. And we can look at here at this 13, this trend line here as a point possibly to sell the market. Sell in May. We have the VIX pointing to it, that 2100 level on S&P 500 futures. And also you want to look at the NASDAQ, which has been leading this market lower, led by Apple. The NASDAQ putting in some sort of a topping pattern here. You can see we put in a lower high. We have a head, two shoulders. We got the neckline here at about 100. Let's see if we break through it here. We're at 105.70. Also small caps. Even since hitting their highs, you draw a trend line across here for the small caps. We met right up against it about 115. We are pulling back. So all of this pointing to possible weaker stock prices heading forward. Again, we have earnings this week, but one stock to watch here, or ETF, is the energy ETF. You can see it breaking out from the long-term trend line after hitting record highs in the middle of 2014. Energy was beaten down. Certainly, I was not bullish on the name here. I thought we were going to continue to break down. We did ultimately to start the year under that 50 level very briefly, but you see we're breaking out. So energy, in spite of the weakness that we're going to see possibly in the stock market, energy could be something maybe as a safe haven, which is pretty ironic considering all the bankruptcies that have come across in that sector recently. Also, you look at financials, earnings coming out this past couple weeks, this earnings season breaking out of this downtrend line. Look at this move to the upside out of it. Possible move higher, energy and financials. On the flip side, again, tech, Apple breaking down. Look at this. We got up the trend line resistance. Look at this candle for last week. Enormous move, over $10 move to the downside for Apple. Post earnings. So again, we have earnings this week. Tesla, and you can see this chart. Wonderful channel after the short squeeze in the 20s, all the way up to 100. And this is when Goldman Sachs downgraded the stock, as it did just recently up here. So yeah, they've been pretty good at that. But you can see this channel. Are we going to head back down? You remember back in February, we were down at the 140s. I think it was 144, 145 before ultimately ripping to the upside and earnings, putting a little cap on that. We're going to see a pullback here for Tesla. Certainly a distinct possibility. This channel, again, has acted as resistance and support along the way. So maybe it moved back to about 200 for Tesla before it moves higher. Also, earnings from Priceline. You can see this channel, we're up above support. I've been chopping around this channel here for about 2 years before breaking out to record highs in the middle of 2015. We pulled back almost $450 into the lows of February. It's been a sharp move back over support. It's a possible bull flag here for Priceline. So we'll keep an eye on that. Possible calls, but you know, the market's pricing in a rather large move. So something maybe we'll trade after the earnings report. A couple other stocks to watch. Amazon broke above trendline resistance, as I was talking about in my video last week, setting up a move to new all-time record highs for Amazon. See if this can get over $700 this week. Again, support now, rest of this trend line. We'll keep a close eye on that. Also, Twitter broke down 15% post-earnings last week. Look at the volume starting to really pick up. So we'll see at some point we get the buyer rumors to come out. Maybe that'll put a bit under the stock, but for now, something to stay away from. But Facebook on the other side of the coin there, look at this earnings report, vaulting it over 120 on its earnings report, ultimately pulling back a little bit on Friday with the rest of the market, but the trend remains firmly in place for Facebook for a move up to possibly 130 in the next couple of weeks. Now let's move to Caterpillar. It's a stock really that's defying its earnings report, the fact it's been laying off employees, the global growth trend. Caterpillar just keeps heading to the upside. Broke over 80 briefly a couple weeks ago, pulled back a little bit, but momentum still on its side. I still think this is a stock that's going to trade down into the 50s in the next couple months. that this rally is going to be short-lived, and those buying up here are going to be holding a Caterpillar truckload of shares that are going to be down 30-40% down the road, but cannot deny this price action. Stock you want to avoid trading for the downside until we start to see it roll over. And how about John Deere? Hello, John Deere's little brother. Moving up to resistance here, short term, longer term to 88 level here. We'll see if we can get up to it. If it cannot hold, this is something that's going to be a great trade for the downside as well. But not right now. Not today. Look at the bond market, TLT breaking out. You can see I talked about this heading into 2016. This consolidation was going to ultimately lead to a big spike to the upside. We got that. We're starting to pull back a little bit, but again, with negative interest rate policy overseas, the bonds are going to remain well bid. So TLT, I think, is going to break back into the 130s, especially if the market starts to pull back. We get that sell in May mentality. First Solar, something to watch here as well. Got some puts into their earnings report. Those worked out pretty good, and you can see starting to pull back here. Its support lies in about the 40s here for First Solar. Something you want to trade for downside. A couple other stocks to watch. How about the GOOGL, Google, breaking down? We're going to find support at 675. So we're setting up here into this week. A break of 700 has been strong support, that 700 level. So if it does break, we're going to get down to 675. This could be a great put trade later in the week. All right, folks, the opening bell's coming in about 7 minutes, so I'm going to head over to the chat room at optionmillionaires.com. Everyone have a great trading day, and there's a lot of earnings this week. We have the jobs report, certainly. Sell in May, is that going to really take foothold this month? Today is going to be a great indicator of what the month has in store for us. All right, I'll see you in the chat room. Take care.